Hey, welcome to Patterns and Profits. I'm Tom Gentile, resident pattern trader. If you've ever felt trapped by the emotional roller coaster of news, opinions, and meme-driven hype, well, you're not alone. Here, we focus on patterns, not panic, on profits, not predictions, and based on a proven, repeatable approach that cuts through the noise and helps you trade with confidence. If you want my videos, education, special reports the moment they're hot off the press, well, then sign up for my newsletter. It's absolutely free. Welcome aboard, and let's get started. Welcome to Patterns and Profits. Glad to have you here. It's Monday, May 4th, 2026. Glad to see everybody hanging out here with me. You know what we do here, guys. I'm Tom Gentile. If you don't know me, America's #1 pattern trader. I'm here to help you make sense of these crazy markets through repeatable pattern trading. And I'd like you to help me too. You can help me in 3 different ways as we go through this live stream together. Number 1, you can like and subscribe to the channel. Because that's what we do here. We share this information with more than just you. We share it with a lot of pattern traders. Also, number 2, if you find it helpful, be sure that you go ahead and share this with other pattern traders. And then one more thing, I got to mention this before we get started. Everything that I do here is not investment advice. Okay. And remember that past performance isn't indicative of future results. So that being said, welcome again, and let's get started here. Okay, well, Monday, May 4th, just after 12 o'clock, instead of jumping straight into oil and energy like I've been doing over the past few weeks, thought I'd start off with something a little bit different. So far, earnings in 2026 have actually been running really good, really strong. A lot of the S&P 500 companies have been beating expectations. Good, solid year-over-year growth. Apple is one that has really just hit it out of the park, folks. You take a look at some of the information on Apple, it blows my mind. First of all, what did they have? $111 billion in record revenue. They're also doing a 100 billion share buyback. All right. You would think when you do a 100 billion share buyback, $100 billion share buyback, that's going to really push the chart to new highs. Here's a chart of Apple. I want to put it on the screen here for us so we can all get a good look at it. It did pop up. It did pop up over here on earnings day or just after earnings day, but we've come off that since then. We got to 288.69, I think was where we were, and we've come off. We're at 275.45 a little earlier this morning. And so when I look at this, I have 3 things on the chart I want to share with you. Number 1, the price, which has been the high that we've seen for the year, was last week just after earnings. We've pulled back from that, and we've actually pulled back below the highs that happened back in February that were above 280. Now we see the lows for the year are down here just below the 250 area. So between 250 and about 290, we are stuck in a sideways pattern. I would not call this an up pattern by any means, but when you look at the fundamentals behind Apple, it just really just begs for something to push this stock higher. So despite year-to-date highs that we just got, volatility is number 2 I want to talk about. That is the red line on the screen here, right? Volatility is still, even though it came off its highs, it's still not near its lows. And because it's not near its lows, I believe that volatility has to drop lower in order for this price to resume moving up and hitting all-time highs. And number 3 is volume. We didn't get the kind of volume that I expected after that earnings. Yeah, we pumped up a bit, but it wasn't anywhere near what I thought it was going to be. So this is actually a good thing because we didn't get a volume spike. That still yields to potentially higher highs going forward. All right. So that's Apple. And so, to kind of turn our attention away from that for a moment, think about this. Despite the war that's going on, U.S. companies are still going strong. Iran proposed a 14-point peace plan. They're looking for sanctions relief. They're looking to end the blockade. They're looking to see the U.S. troops withdraw. U.S. is still skeptical, but strong first quarter earnings season and optimism around the Middle East. That's why the markets have really started to trade in these new record highs for recent days. Now, the other thing I want to mention is that guess what? It is Money Calendar Monday. So when I look at the money calendar for the week, this is what I see first and foremost, the weekly outlook. When I look at the weekly outlook, I'm looking at what does the pattern show me for overall stocks that we're following, overall stocks that have a tendency to go higher or lower going forward. And for the week of May 4th to May 8th, the majority of these stocks are bullish. Take a look at what we see here for today, the 4th. I've got 25 ETFs, 21 of them are bullish, 4 are bearish. And you know what's funny? The 4 that are bearish, the majority of them, they go down when the market goes up. So that to me is even more of a potential spring breakout session for stocks, right? Not just ETFs, but stocks. So I'm looking in that 40 to 60 day time frame. And when we look towards the end of the week, tomorrow, 80-20, Wednesday, 77-23, Thursday, 80-20, Friday, 79-21, still in the ETF time frame. And we look at all the major ETFs, we see the majority of them are showing a lot of bullishness. When we look at these time frames, these 40 to 60 day time frames, we scan for these viable patterns. Now, there's still some headline volatility out there, and that means there's some risk. So we're looking to still play it safe with the time frames that we see here. All right. Now, I got to give a nod again to a couple of the ETFs. We talked about QQQ in the last several weeks, one of the most popular ETFs out there. And for those who don't know, the Qs trade the NASDAQ 100 index. This is 100 of the largest non-financial companies that are listed on NASDAQ. Big names like Apple, which we just discussed, Microsoft, NVIDIA, Amazon, and others. The other index we've been talking a lot about recently is SPY. Now, SPY is the Spider Trust. That is really the most widely exchange-traded fund in the world. It's very liquid, extremely popular, and widely used as the U.S. benchmark. Now, investors use the SPY to gauge how the overall stock market's doing, and it's designed to mirror the performance of the S&P 500, right? This is 500 of the largest U.S. companies. And again, I'm talking about companies like Apple, like Microsoft, like Amazon. But today, I want to do a deep dive, not on SPY, all right, which is down here at the bottom. Great patterns, by the way, that we see, 9 of the last 10 years, it's ran up in the months we're currently in. QQQ, 9 of the last 10 years, we see an average 10% move that happens through the majority of between now and well into summer. But the one I want to talk about today for our education is one that maybe not a lot of you know about, and that is SVXY. All right. So the question you should be asking if you don't know this is, well, what's SVXY? SVXY is the ProShares short-term VIX. All right. It's the VIX Futures ETF. It's an ETF that's designed to move opposite of short-term VIX or VIX futures. So when you hear about the VIX, most of us know the VIX is a volatility index, and VIX is high. That means the markets are moving lower. When the VIX is low, it means typically the markets are moving higher. Well, SVXY is opposite of the VIX. So think of it this way. SVXY moves with the markets. It moves up when the markets are bullish. It moves down when the markets are bearish. And so it tends to rise and fall with the markets themselves. So it trades the opposite of the VIX itself. Now, let's take a look at a chart of this. And more importantly, let's take a look at the seasonality first. The seasonality is actually fantastic. When you look at what SVXY has done in the past 10 years, and there's no guarantee it's going to do it again this year. But when we look at what it's done in the last 10 years, this is what I look at between now and end of July, all right, through July. We saw the last 10 years where SVXY has actually moved higher. And it's moved higher an average of just under 15%. That's a pretty bold move. But take a look and see what I'm talking about here. The best in the last 10 years that SVXY has moved was 29.74%. That was in 2023. And remember, what happened in 2023? We had that kick off of the 2022 bear market. And the NASDAQ and tech stocks really led the way. But if you take a look at every other year was positive as well. The worst that SVXY did in the last 10 years was a 5.5% move that happened back in 2020. So that's the seasonality of it. And again, there's no guarantee it's going to happen again this year. But if you're a pattern trader like I am, and you like to discover repeatable patterns, this is definitely one worth considering. Now, take a look at a chart of SVXY. I'm going to blow this one up because when you take a look at this chart, I took this all the way back into October of last year. So you take a look at October of last year, and we're talking about SVXY moving between, say, the low 50s and the mid 40s, back up to the low 50s, back down to the mid 40s by Thanksgiving. Then we had that run. Remember, we had the run with the S&P, we had the run with QQQ, and SVXY ran with it. Topped out here right around January, and then we had the pullback, that double-digit pullback that happened in the overall markets. Well, it happened in SVXY as well when it went from above 55 down to the low 40s. So, count that off with me here. That is really about when you go from 55 down to 42.5, that's a 12.5 point move on a $55 instrument. We're talking about a 20% move to the downside. Since then, however, in just the last month, we've seen a reversion to the markets. We've seen a reversion to volatility, and we've seen a reversion or a bounce in SVXY going from 42.50 back up to the low 50s. Now we're entering that seasonal bullish pattern, okay, where as seasonal traders, we look for a projection on time, but we also look for a projection on price. And if the projection on price is correct, we should see a breakout to new year-to-date highs on SVXY. All right. So I want you to think about this for a moment. How do you trade all this? You could, in fact, go in and simply buy. All right. You could buy SVXY and look at it as a way of, buying it when the pattern begins and selling it when the pattern ends. That's one way you could play it. The other way you could play it is by looking at options, all right? For instance, long options like long calls, all right? Also, long call spreads. That's another way that you can go in and you can lower your cost, you can lower your risk, and you can put together a reward scenario where you could definitely see potential for double-digit returns, even with a single-digit move in the industry that ETF SVXY. But overall, we're heading into May. Market's looking pretty strong. All right, number one, buying indices, as I've talked about time and time again, that's one way to play the bull. QQQ, SPY, stocks in QQQ, stocks in SVXY. There's ways to do that, but the big way I want to talk about is the inverse. All right, inverse ETFs like SVXY. So let's try this again. Markets are heading strong into May. Buying indices, one way to play this bull. And inverse ETFs. When I talk about inverse ETFs, I'm talking about ETFs that trade opposite of their particular asset or derivative. SVXY is opposite of VIX. That's one way. just another way to trade a bullish seasonal opportunity. Now, do you have comments on this? What do you think is going to happen? What do you guys think is going to happen with these markets? I mean, we're coming into May right now, and I'm going to be doing a deep dive next week when we get into sell in May and go away, because that's being thrown around on the big screen. Sell in May and go away. I think they got it all wrong. I'm gonna talk about that. I've got a special report I'm going to be talking about with that as well. But what do you think? What do you see happening within the months of May, June, July? Do you see the same thing I do, or do you see something different? All right. That's what I want to talk about with those of you. And you know what else I want to talk about? I want to talk about the seasonality in Bitcoin. I want to talk about what's going on with Bitcoin. I want to talk about seasonality in Bitcoin. So, that's what we're gonna discuss. And I've got a lot to cover with you guys. I still have a lot to cover with you here before we run into the other end of our Patterns and Profits Live. So hang out here with me. Be right back. Hey, welcome to Patterns and Profits. I'm Tom Gentile, resident pattern trader. If you've ever felt trapped by the emotional roller coaster of news, opinions, and meme-driven hype, well, you're not alone. Here, we focus on patterns, not panic, on profits, not predictions, and based on a proven, repeatable approach that cuts through the noise and helps you trade with confidence. If you want my videos, education, and special reports the moment they're hot off the press, well, then sign up for my newsletter. It's absolutely free. Welcome aboard, and let's get started. All right, I'm back. Needed to take a sip of water, guys. What's going on with the Q&A? I see a lot of hellos. Hi, everyone. Hey, what's going on there? We got Becker in here from sunny Florida. I'm in sunny Florida right now, and it is definitely sunny. We had some overcast skies here over the weekend, but got a little bit of needed rain in the Sarasota area. Definitely needed that as well. So glad to see everybody kind of tuning in here with me. And so let's take a look and see. No link on the YouTube. That's an interesting one. But we're here now, so glad to have you guys all coming in here. When I talk about, any type of patterns, and I talk about them definitely when I talk about them here. All right. What I do is I like you to go out and verify. All right. Trust but verify. That's what I mean. Go out and verify what I'm showing you. Go and look at the charts and look and see what the Qs, what the SPY looks like, what the all markets look like when we go into May and June and July. I want you to take a look at those. Go back. Everybody in this room, regardless of whether you're a member of mine, regardless of whether you follow you use the money calendar tools that we have, regardless whether you're a part of Money Calendar Pro, right? Regardless of any of that, you all have access to charts, all right? Bring up charts. Look at charts. Go and take a look at them and do the work yourself. And what you're going to find is when you go over and you take a look at something like an SPY, all right? I'm going to bring it up on the screen here real quick, kind of show you how this works, all right? We're going to use a very easy approach, SPY. And here's the S&P 500 ETF. And I'm turning off the options portion so I have more room for the actual chart itself. Let's just shut as much stuff off as possible. Now, look at what happened in May and June and July of last year. We had this nice big run up before we started to cough it up a bit here. But I mean, still, maybe that's not good enough for you. Or maybe what you can do is we can crunch this down and let's look at weekly, all right, weekly charts. All right, so here is May, June, and July of last year. Here is May, June, and July of, and so this is 2024, right? And here's 2023, May, June, July. And then here's 2022, where we did get an April, a May that kind of popped down, but June and July popped back up again. And then here's 2021, May, June, July. And then here's 2020, May, June, July. All of you hanging out with me today, you all have the ability to do this, right? The reason I created the money calendar is to be able to have a tool that could do this for me. So I didn't have to use the number 2 pencil and eraser approach, right? That way I could be a little bit more efficient. Plus, what it does is it goes in, my tool goes in and allows me to look at individual stocks, not just ETFs, not just the overall market, but I can look at individual stocks with the click of a button. I can go in and do this. Watch this. Okay, let's blow this up. Let's go look at, you want to look at some stocks? Let's look at some stocks. I'm going to go over here and I'm going to click on all. Now watch what happens. Now I got 167 stocks that are making the grade right now. What about AI stocks, Tom? Are there any AI stocks? Yeah, there's 14 of them. 14-0 on AI stocks right now in terms of what's bullish to bearish. Okay. I have a list, my list called the 1%er list. That's the top 1% of stocks traded by market cap. 15 of them are popping up right now. 15-0 right now. So the 1%ers, the big volume, the big market cap are all screaming, let's start looking at buying these things. And I can look at these in communication and discretionary, staples, energies, financial, you name it, right? But it all starts, everything that I do starts with, all right, starts with looking at the overall markets and doing it the way I just told you to do it. Look at charts, right? You know, in order for me to get to where I am with this tool right here, I had to start with this tool right here. And so when you ask, should I buy now and sell in July, right? I'm telling you what I'm doing, right? It's up to you to decide what you want to do, okay? Jim Bull, good to see you, buddy. And good comment. 95% of company orders have been beating expectations. So should the market up, Iran will have temporary up and downs, but overall will be positive. And again, with earnings, you know, I mean, it's I have earnings patterns. I have some earnings patterns, and I'm going to be sharing some more of that information with you later on during the year. But you know, as a seasonal trader, earnings in my case are built in. They're built into what the stock has done over and over again. So those that continually beat, well, they're going to be continually green on the screen during those times. There are some times where you see earnings patterns in Q1 that beat, but then you get to Q3 and they miss. And that's all built into the seasonality for the most part as well. All right. Here's a comment here. I'm not smart enough yet. That's okay, Ray. We were all in this together. We were all not smart enough at one time or another. You know what I did when I was not smart enough? I made the mistake of following mainstream media, people that had no skin in the game back in 1987. And I had a little mixture of greed with a small dose of I knew nothing and a big heaping help of watching mainstream media and listening to the guy with the loudest voice. And there's a lot of guys with loud voices, all right? A lot of people with loud voices right here on social media. I like to think that what we do is we take a look at the markets from a different angle. And my angle comes from experience. And my angle comes from knowledge. And my angle comes from skin in the game too, right? So, you know, hopefully I can continue to educate and teach you guys, you know, exactly what we're doing here. Now, this is a good one too. And I'm bringing Jim back up here, Jimbo, one more time. And so he said today, when April's been up like this year, May has been up 24 of the last 26 years. And for those of you just joining me, I will be next week doing the deep dive on Sell in May and Go Away, myth or real. And I've got a report that I'm going to be giving away to all of you that join me as well. So I've got a free report that's going to be coming with that. So you won't have to take notes. You won't have to hit the replay too many times because you'll have the information that backs what I'm going to be talking about. I'm going to do that next week, however. All right. So thank you all for the comments, questions, etc. Now what I want to do is I want to turn to something else. Okay. Last week, I did a special session. Maybe some of you missed it, and that's fine because I'm going to truncate what I talked about. I did an hour-long presentation on Bitcoin and BTC. I want to break that down into a small little 5 or 10 minutes on what I see happening in the BTC market. So let's get straight into that. Get that comment and question off the board there. There we go. All right. So recently I did a closed-end webinar series to my members. And in that webinar series, I was talking about Bitcoin. I was talking about crypto. I was talking about the fact that I see it turning green here very soon, actually happening now. And I talked about the few reasons, the 3 reasons that we saw it going higher, and the 3 ways that I am trading it. I want to give you the cliff notes on that here in this short session. And so let's talk about Bitcoin. Let's talk about the number one thing that long term that me and a few others are looking at, and that is the halving effect. Now, you may know the halving effect is the ability that about every 4 years, Bitcoin cuts its reward to the miners by 50%, cuts it in half. So think about a pie. When you slice a pie in half, you still have half of the pie. When you slice that pie in half, now you've taken that half and you've brought it down to a quarter, which is half of the new half, et cetera, et cetera, et cetera. And that's what's happened with the halving. It cuts the reward by 50% every 4 years. What does that mean? That means that the difficulty, not only difficulty in finding Bitcoin increases, but the rewards you get for solving blocks, well, that becomes less and less. The historical halving in the bottom timeline looks like this, is that the bottom of that cycle almost always occurs significantly before the halving. All right. So what happens is that sets up a supply shot. Now, I want you to take a look at these 4 halvings that happened here. You got the 2012 halving, that the bottom occurred 359 days prior to the 2012 halving. The bottom occurred 546 days prior to the 2026 halving, 517 days prior to 2020 halving, and the last halving we had, which is in 2024, seems so long ago, but the bottom occurred 518 days prior. Here's the takeaway. On average, the definitive bottom was established roughly between 480 to 530 days before the halving event. So we're taking a long-term look at Bitcoin first. Next, where are we in the cycle right now? All right. So I call it the 700-day cycle. So we look at 700 days after halving, probability is extremely high that a cycle bottom is in for Bitcoin. What's interesting about this halving is that we lingered into late into this year. Right? We lingered late into the year because we had ETFs coming on board. Not just ETFs on futures, but we had the ETFs coming on board that were physical ETFs. And we had a lot of cramming going on, crowding at the door. So that pushed that cycle high closer to what I believe the cycle low is right now. So that 700 days after, we're 738, 740 days now since the last halving cycle. The cycle for Bitcoin, when you look at the bull bear cycle, however, looks like it has bottomed on February 5th. BTC was trading for about 62,000. Last night, I don't know if you saw it, Bitcoin hit 80,000. We haven't seen that now. I think that's a 90-day high. Last time we saw anything higher than that, you got to go back into January. In fact, I believe the high in January that I saw was around 95,000 before we started the big drop down into 62. So since then, we've seen a steady recovery off of the February lows. Now, this is what we look at, which I call the diminishing X factor. And I'm looking at about we look at on the positive side, I see about upwards of an 8x return. But if you want a conservative, like base case estimate I'm looking at, all right, 160,000 is what I see as a base case. Now, my base case goes out by 2028. So I'm looking at 160,000 happening between now and, say, the end of 2027 as we get closer and closer to, guess what happens in 2028? Another halving occurs, right? What's the halving going to do then? It's going to take us down to, is it 1.56, I think? I mean, we get low. And for those of you that don't know this, Bitcoin's first rewards were 50 coins. You got 50 Bitcoins when you solved an equation, and the equations were much easier to solve then, this was prior to 2012, than they are now. Now it takes much more computational power to solve a block, to get rewards. And what are you getting for rewards? 3.12. Now you're going to get it starting in 2028, and around spring 2028, it's going to drop to 1.56. And the miners are just going to get squeezed right out of onboarding supply. It just gets less and less. So when you have some supply that gets less, and you got demand, even if demand stays the same, that causes the price of any asset to move higher. Now let's move inside of Bitcoin and let's look at Bitcoin, what I think is the most popular ETF out there, and that is IBIT. This is IBIT. This is a weekly chart of IBIT that takes us back to 2024. I didn't even go back to the lows because IBIT didn't start trading until 2024. And when it did, it dropped down a little bit, but then that low that came in down there just above 20, well, that held. And we started seeing higher lows and higher highs. It took us all the way up to IBIT's all-time high of just above 70. Now, that occurred in October. October 6th, I believe, was when that occurred. October 6th or October 7th. And then we started the pullback. So when you look at the pullback on IBIT, you can see it went well below the 61.8% move to the downside. But you got to understand something, okay? IBIT trades off of Bitcoin. And Bitcoin has a much longer chart than IBIT. So those that look at IBIT and IBIT only are not seeing the full picture. You're not seeing what happened prior to IBIT's IPO, if we're going to call it that. But still held strong. It held strong there in the first quarter, and we jumped above that. So now I start to look at this, and I look at a couple of things. And number one, I see us coming back at and above the 50% retracement. All right. So where do we get to if we target 90? So what I'm targeting 90 is I'm targeting 90 as a extension. An extension past its all-time high would be the 38.2% extension. That puts us right around 90. 90 in IBIT terms is about 160 in Bitcoin terms. And what do I have down here? 2028 at the end of the chart. Long term, we're talking investing right now, okay? But what if you want to be a trader? What if you're looking at not a 2-year cycle? What if you want to look at something that's more in the 30 to 60-day realm as a trader? Well, that's what I want to talk a little bit about here. So, when I get into the day chart and I see what's going on with the day chart is setting up for more of these, what I call higher low, higher high scenarios. And so if the day chart's showing me that, we're in a downtrend, well, we are in a slow downtrend when you look at the April lows to the October highs to back down to where we are this year's April. But here's something that changed, right? April had a higher low, and we're starting to move more towards a 50, all right, a $50 move in IBIT. I think 50 really ignites the rally. Last night we hit 80,000 in Bitcoin. And I'm looking at it and I'm like, it hit 80,000. And about an hour later, it was back below 80. And then all of a sudden now we're down below 79 again as we're testing the buy and sells out there. But 80 was significant, all right? 80 significant, I think, when you take a look at IBIT, which is going to be much more traded. This is the paper Bitcoin. It's much more bought, held, and traded than Bitcoin itself. So you need to look at this because this is where all the inflows are going. This is going to drive Bitcoin because it's based on the physical. We get above 50, you're going to start seeing these inflows getting bigger and bigger. So keep that in mind. The other thing that really makes me believe that bottom is in is we had a huge volume spike down here when we dropped into and below the mid 30s on IBIT. Big jumps, a lot of movement, people getting margin calls. There were some big names that margin out at that time. Michael Saylor wasn't one of them, right? But there were some big names where we saw margin calls that came out. And I think that also exhausted the sell side. So there you go. How am I trading this? I'm trading it the same way that I've been trading it since 2018. Okay. I take a three-pronged approach to this, but what I'm doing is I'm looking at trend trading strategies, using something I call my currency wave strategy, and, setting this up on IBIT. So, to me, IBIT is locked and loaded for a currency wave move. And I have something that we call our quantum buy and sell signals. And some of you that know me for a while, we did some stuff with something called quantum scripts and quantum buy and sell. And I have the tools for that. And when I apply that to something like IBIT, we're getting very, very close to a quantum buy. And you know where I think that quantum buy is going to be? Right above 50. I think we get the quantum buy on IBIT, which really goes in line with what we see with what I just talked about, right? What we see with Fibonacci. So the other thing I do is I look at seasonality. Now, interestingly enough, we're seeing things like IBIT. Now IBIT, again, IBIT's only been around for a couple of years. So if I'm going to look at something, I got to look at 5 years back. I got to look at 7 years back. I got to look at 10 years back. I got to look at 20 years back, because that gives me patterns. Okay. 2 years back is not a pattern. To me, 1's a single, 2's a couple, 3 is a handful. I need a minimum of 5 years. And I really like 10 years when I'm looking at longer term patterns. But I can look at patterns in stocks that have a stronghold in Bitcoin or in blockchain. And so I look at that and I'm seeing a lot of the seasonality stocks tending to move higher. So the money calendar for Bitcoin assets, well, they started turning bullish. They didn't actually start turning bullish. Guess when? Next week. Next week, I actually start seeing BTC and BTC assets. Not this week. I got nothing on the screen this week, right? So if I'm looking, this is where we are right now. This is what I'm starting to see as we get into the middle of May and into June and into July. And I see that for BTC assets, right? So that's step 2. And then step 3 is that when we do see these, I'm not looking at just low volatility, let's buy a call spread. I'm also looking at high volatility strategies, being able to put that limit order out on these for much lower prices than where they are today and having a high probability of profit. In fact, the way that I've been trading Bitcoin stocks, crypto stocks, and crypto options, more than 50% of the time, I'd say it's much more than 50% of the time, I've been using the high volatility strategy. All right. So what has it done for us here in the last year? It's allowed me to go 14-2 in a market that's been prominently down. Okay. In a market that's been prominently down. So I want you to think about a couple things here as we close out our session today. Number 1, I'm stepping back into Bitcoin, not only as an investor. I've been in Bitcoin as an investor for well over a decade now, but as a trader, I'm starting to step back in. And what I mean by that is not just sell the high premium stuff, but start looking at the assets themselves, Bitcoin and Ethereum, start looking at the ETFs on Bitcoin and Ethereum, start looking at the stocks on Bitcoin and Ethereum. But as we start to continue these higher lows and higher highs, no guarantee it's going to happen. But if it does happen, what's going to happen is volatility in these assets is going to continue to go lower, and it's going to allow me to shift gears and start buying cheap calls and start buying these at the money to out of the money call spreads, right? Which have the lower cost, which have the lower risk, and which have those lower return on investments. And if you want to join me, you see that QR code up there? If you want to join me, I am doing my once a year, it's the only time I'm doing it, Cryptos and Commodities Mastery Series. Now, I'm not going to go through the whole thing with you, all right? I'll leave a link in the description, or you could go back to the channel, actually go back to your emails, and you can see that. But I'll leave a link in the description if you want to see the entire 1 hour session that I did with Q&A. But to sum it up, what I'm basically doing is a 4-week live workshop. The entire month of May, I'm doing live workshops. I'm also, during that month of May, that it's including my Cryptos and Commodities scanners, the Money Calendar software, Cryptos and Commodities research alert service. That's where we've gone 14-2 here in the last, this last run we've had, and access to a members only website where you'll get notes and you'll get all kinds of valuable add-ons from me. This is a value, if you add all this up, of about $19.95. I'm doing it for $495. I have a few spots left open as we jump into this. This is starting Wednesday. All right, this is starting in a very short time. So if you want to be a part of it, folks, this is the last chance, last call for my 2026 Cryptos and Commodities Masterclass. And again, you can find it 2 different ways. Number one, you can find it on this QR code that's right here in front of you. The other thing we can do, and I'm going to put it right there in the chat, for those of you that are watching this maybe on your phone, and you can't snapshot something that's right now on the phone, here is a link to the masterclass, and you can pick it right up from me at Patterns and Profits. That's my handle here on the live stream. So there we go. All right. And that is all of that, the live stream, the software, the scans, the alerts are all part of the 4-week program, right? So you can really get immersed in exactly what I do during these 4 weeks. Probably the most important thing is I'm going to be mentoring you during these 4 weeks, showing you exactly how I get into. We're going to do live trades too. Every single week we'll be doing live trades, so you can follow me along. And when it comes to live trades, I set the trade up, so I'll spot the opportunity with you. We'll create that alternative risk strategy, and then we'll plan, execute, manage the strategy. And what I do is I am the last one in these live courses to get into the trade. I back run the trade. I don't put the trade out there and then tell you to get into it. I do quite the contrary. All right. I put the trade on after I've given ample time for you to evaluate it yourself. All right. I do these. These are going to be on Wednesdays during the month of May, starting this Wednesday, and they're going to be at noon every Wednesday. And here's the other thing. If you don't catch the live session, I don't day trade. Remember, guys, not a day trader, not a meme trader. I'm a pattern trader. And because I'm a pattern trader, I don't need that tick by tick. If I don't get in now, I don't get in. Okay. So, the trades that we'll be setting up are going to be 30 to 60, possibly 90-day trades. So this is not something that I'm going to be doing where, you're stuck. All right. How much do you need to know about crypto? You could know nothing about crypto, because this week I'm going to be talking about the foundations. We talk about foundations of crypto, and then I'll be getting into over the 4-week program, the steps that I use, looking at Fibonacci, looking at currency waves. What is a currency wave? We're going to break that all down. We're going to look at seasonality. We're going to look at high volatility. We're going to put all these together. I'm going to even talk about how you could layer these strategies together, where we're seeing seasonality and high volatility, where we're seeing currency waves and Fibonacci, et cetera. We're going to mix it all up. And I'm going to show you how to put together a plan. So at the end of the 4 weeks, you know where to go moving forward and what you want to focus on. All right. Again, got the link there for any of you that are interested in joining me. Again, I'm holding this to 25 new members. All right. So we're there. We're almost there. We're going to be starting this in 2 days, and that's it on that session. Any questions, comments that you have, if you're like me, don't think about questions until I'm not here. Member services at gulfportanalytics.com. And my support's here with me right now, so he's going to punch in that email address for you again. That is member services at gulfportanalytics.com. Big takeaway here is that I am long Bitcoin, and I am long Bitcoin stocks and ETFs, not only as an investor, but I'm now sliding back into that area as a trader. And guess what? You don't need a digital wallet. You don't need a digital wallet. I'm going to show you exactly how. We'll talk about them, but you don't need it. And in fact, I think hard wallets, there are people out there that don't need hard wallets. And I'm going to tell you why. We'll get into that as well. We'll get into that on Wednesday. So there you go. Hey, thank you all for joining me. And, tune in again next week. We're going to get into sell in May and go away, or buy in May and make money today. That's going to be the main topic of discussion next week. Come and join me. We're going to talk about it. We're also going to have a free report that I will have, and I will be putting that in the descriptions next week so that you can follow along with me when we're live. So there you go, folks. I hope you enjoyed our time together. And yes, alerts are included, Weekend Warrior. So I hope you enjoyed the time together with me, guys. Again, you can bring this back up on the YouTube channel. We store everything. Just go to the live cast and you'll be able to bring this back up along with everything else we've done. Thanks for joining me. I'll see you again here, same time next week. I'm out. We'll see you later. Bye now.